price cut today, what does that mean for demand, and especially what does that mean for margins? Look, my view is that they've actually have now the scale to expand margins. So they have flexibility. They could cut prices even another 4 to 5%, and margins still, I believe could stay relatively range bound. But it's all about the fear of the unknown. You obviously have a key earnings, the key guidance coming around the corner January 25th. And Musk is the one that started the 5-alarm fire. He is the only one that could extinguish it.
Dan, if brands want to get away from the Elon Musk brand, because that's what it is, right? Do consumers want to get away from the Elon Musk brand?
Well, look, I think brand deterioration has been an issue. We've talked about it. It's a black eye for Musk. It's a black eye for Tesla. It's a fork in the road. It's a moment of truth for Musk, and it all starts Jan 25th. You got to set realistic expectations to hit, and then I believe the stock starts to correct itself.
Get more of this and other conversations on the latest edition of the Tape Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is the Bloomberg Business Flash.
And I'm Paul Allen in Sydney, where we have a bit of a rally on the ASX, better by 0.6% right now, coming off some of the highs that we've seen a little earlier on in trading. But that is pretty much the theme across the Asia Pacific at the moment. All of the major indexes higher. The Kospi the best performing at the moment, better by a little over 2%. The Hang Seng in Hong Kong better by 1.6%. Shanghai Composite better by 1/3 of 1%. We're seeing some strength also in Singapore, Taiwan, Malaysia, pretty much everywhere. In fact, it's just New Zealand that's off by a few points right now. No trade in Japan today. It is a public holiday, so we've got no trade in US sovereigns either. But we did see the yield on the 10-year dip a little on Friday, down to 355.80 off the back of a pretty positive jobs report, really. Payrolls coming in a little bit above forecast. That's for the 9th month in a row. Unemployment fell, participation was up, and average hourly earnings also slowed down, just increasing by 1/3 of 1% in December. So that gives the Fed plenty of room to move at its next meeting towards the end of the month. We've had a little bit of news out of Alibaba as well. Jack Ma, of course, now going to cede control of Ant Group, and Ant saying it's got no plans for an IPO for now. A quick look at the oil price. A little bit of a recovery going on at the moment. West Texas 74.40 a barrel. A bit of weakness for the yen at the moment, 131.67. Not a lot on the data docket today, but this week we are going to get quite a lot of inflation data out of China, Japan, Australia, and the US at the end of the week as well. And that is your market update. Let's take a look at this weekend at the box office now.
What's wrong with you? Don't worry, Kitty. I won't let anything harm you. Ever again.
Oh, how foreboding. Universal and Blumhouse's creepy doll thriller, M3 GAN, that is short for Model 3 Generative Android, had a very successful opening weekend. It posted a better-than-expected $30.2 million at North American theaters. The film was projected to open with 17 to 20 million. Still, ticket sales for M3 GAN weren't enough to move it past the number 2 spot at the box office. Director James Cameron's blockbuster sequel, Avatar: The Way of Water, well, that's number 1 again for a 4th consecutive weekend. That earned $45 million. So far, Avatar 2 generating about $1.7 billion globally. It's a pretty good rate of return there for the studio. That makes the picture currently the 7th biggest movie in history. And that is a look at your box office. And Brian, I mentioned a moment ago, not a lot of data on the docket today, but there is a lot of inflation data coming out this week. China, Japan, here in Australia as well, we'll get CPI numbers. But in terms of the US, what are we anticipating there?
Yeah, that report is very much awaited because you got, sort of a green light at the end of the tunnel in the data that we saw on Friday. But the investors and traders will be looking for a little bit more conclusive data in that CPI report and also in the PCE numbers that we'll get. So it seems to be a crucial part of really how to structure your portfolio right now. We've had some gains here, but don't forget we were down about 4 weeks in a row for equities in the U.S. Leading up to this.
Yeah, maybe a sense also that the era of supersized rate increases might be coming to an end. That's something our last guest, Omar Slim, seemed to suggest. And Atlanta Fed President Raphael Bostic also saying, well, he'd be comfortable now with 50 or 25 basis points at the next meeting. So that meeting at the end of the month is very much a live one.
Yeah, and then we'll start looking forward to when do they actually pause? When do they actually say leave rates steady? So maybe coming up sometime in the spring, and it'll be big for markets when that happens. I think the other big story, quite interesting, is China. You've got all kinds of reasons there to maybe step in. We'll be chatting with Daniel Lam coming up in the next hour from Standard Chartered Wealth Management. This is Bloomberg.
Live from the financial capital of the world, broadcasting across the globe, this is WBBR New York, Bloomberg 1130.
This is Bloomberg Daybreak Asia for this Monday, January 9th in Hong Kong, Sunday, January 8th in New York. And coming up this hour,
Asian stocks rise after the U.S. jobs report showed wage growth moderating.
billionaire Jack Ma cedes control of Ant Group following China's tech crackdown.
And Hong Kong's reopening may push its GDP growth above Singapore's this year.
Homecoming rush as China borders open. Hard choices on U.S. debt ceiling ahead and fractured U.S. Congress. Government invasion in Brazil. I'm Ed Baxter with Global News.
Manchester City dominates Chelsea in an FA Cup third-round match. I'm Dan Schwartzman. I'll have that story and more coming up in Bloomberg Sports.
That's all straight ahead on Bloomberg Daybreak Asia, on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Final hour of the program. A very good morning to you from Hong Kong. I'm Brian Curtis. Doug Krisner is off today.
And I'm Paul Allen in Sydney, 1 minute past 1, Monday afternoon here. We've got most major markets in positive territory. And what's driving all of this, Brian?
Well, a lot of it is the data that we saw last week in the U.S., the services activity and contraction and the slowdown in wage growth. It just sort of raises the question of a governor on the Fed engine, and perhaps just a little bit of a slowdown in the rapid pace of rate hikes that we've seen. Treasuries rallied big time, and stocks did too. The S&P 500 was up 2.3%. That's fed through pretty nicely here. We also have another big story with the opening of China. And so we're seeing, companies like Goldman Sachs talking about further 15% upside for the MSCI China index from current levels. And, this kind of gels with the point that we were making earlier with Shuli Ren. Goldman says the starting point of the recovery is low valuations. It's low prices and low valuations, and that is very important. So we know that they're ditching COVID. That's extremely important. There's a much easier policy on technology now, and they've also made some recent policy changes to provide more liquidity to the property market. That seems to be helping a lot too, but low valuations may be at the core. Morgan Stanley has hiked 10 cents price target by 17%. And forecasts its 2023 revenue will rise 12% year on year. The Hang Seng Index is up 1 3/4%. The Hang Seng Tech Index up 2 3/4%. The ASX rallying 2/3%. And in Taiwan, the TAIEX up 1.9%, vying with the Kospi's gain as the best in the region today. Paul, to you.
Well, Atlanta Fed President Raphael Bostic says inflation is still too high, and he thinks the Fed does need to keep on raising interest rates to get those high prices down. This is despite cooler than expected wage data. Bostic said he'd be comfortable with 50 or 25 basis points at the Fed's next meeting.
One of the things for me, we got a fair amount of feedback from the business community that the holiday season experience was going to be a big driver about their expectations about where the year is going to go. So as those numbers come out, and we get a clearer sense, that will really help me move 25 versus 50.
Bostic reiterated that he favours raising interest rates above 5%, and that's compared to the current level of just below 4.5%. Policymakers say their next rate move will, of course, be determined by economic data. Fed officials next going to meet on January 31.
And so, all eyes on the U.S. inflation data coming up this week. Let's get a preview from Bloomberg's Susanna Palmer.
Inflation data this week are expected to show a gradual step down in cost pressures. Traders and investors expect that will help determine the size of the Federal Reserve's next interest rate increase. The Consumer Price Index, excluding food and energy, is known as the core CPI and is seen as a better underlying indicator than the headline measure. It's projected to have risen 0.3% in December. It would be well below the 0.5% average seen from January through September last year amid the highest inflation in a generation. The CPI comes out on Thursday. Susanna Palmer, Bloomberg Daybreak Asia.
Jack Ma is giving up control of Ant Group. Bloomberg's David Inglese has more.
Ma is stepping back further from the company even as China's tech crackdown eases. The company is now offering 10 individuals, the management, staff, and Ma himself voting rights independently. It effectively removes Ma's control of the company. The billionaire has mostly disappeared from public view since giving a speech that criticized Chinese regulators. That was on the eve of Ant's proposed listing back in 2020, and that IPO was, of course, later dropped. Ma will still have about 6.2% of the voting rights after the adjustment that's based on Bloomberg calculations. And also said it does not plan to seek a new IPO, and the company said it would remain focused on rebuilding its business to appease regulators. David Inglese, Bloomberg Daybreak Asia.
And partially because of that very story, we see Alibaba jumping almost 8% in the market today. That's a gain of $7.90 to $109.50. And we've got Daniel Lamb coming up in a few moments, head of equity strategy at Standard Chartered Wealth Management. One of the basic questions, should you play it safe or should you get aggressive here? That's all coming up. But now it's time for global news. Well, travel has begun both in and out of China, and we're seeing flows quite dramatic in both directions. And what it all means, let's get to Ed Baxter in the 960 newsroom in San Francisco. Ed?
Well, it means a lot of joy, Brian, as you well know, because it means a reuniting of family after 3 years of COVID. China no longer requires quarantine for arrivals, although it does require a 48-hour negative COVID test result before travel. Bloomberg's Stephen Engel.
People are coming back. They're taking the opportunity to get back into China, whether that's through Hong Kong or direct flights. But direct flights still sort of limited into China, but that will be opening up. The border between China and Hong Kong, obviously opening up. There's a quota of 60,000 a day, and including 50,000 for the land border. And the South China Morning Post saying preliminary figures from about 8 p.m. last night showing more than 45,000 total.
Yes, so for that jubilation that we mentioned and family reunions, it also means some grave concern in some quarters about the open spread now of COVID. It also comes at a time of concern about the lack of transparency from Beijing regarding the number of illnesses and deaths. For example, for January 7th, the government reported out 2 new deaths, 3 for the day before. With the U.S. House speakership battle finally over, the Congress this week will have to turn to a number of very important issues, and there's a warning to Speaker McCarthy from Representative Chip Roy of his party that the debt ceiling standoff could lead to more congressional chaos.
It's January, so the debt ceiling or the debate is going to be in a few months. Let's do it now, guys. Let's get this out there. Both sides of the aisle, everybody within each party, let's figure out how we're going to actually fix this, because the American people are sick of us not doing our job.
Yeah, Roy on CNN. Meanwhile, moderate Republican Nancy Mace says she's concerned that common sense legislation is going to have a hard fight in the new Congress.
For example, we have 12 bills that we're supposedly going to be voting on in our first week in office. 3 of them are abortion bills and pro-life bills. I am pro-life, but I have many exceptions. But they are not pieces of legislation that can pass the Senate and get onto the desk for the president to sign into law.
May says it was a food fight, cannot be allowed to continue. wide-ranging, stark, dark, telling interview is aired on CBS 60 Minutes with Prince Harry, where he defends his wife, Meghan Markle, talks about his strained relationship with his brother, William, and his struggle to mourn the death of his mother, Princess Diana.
Yeah, I mean, it was obvious to us as kids the British press's part in our mother's misery. And I had a lot of anger inside of me that, luckily, I never expressed to anybody, but I resorted to drinking heavily because I wanted to numb the feeling, or I wanted to distract myself from whatever I was thinking, and I would resort to drugs as well.
Yeah, and some hallucinogenic drug therapy, he says. His memoir titled Spare comes out this week. In San Francisco, I'm Ed Baxter. This is Bloomberg. All right, Brian?
Yeah, thanks very much. 9 minutes past the hour here. Let's get to Daniel Lamb, Head of Equity Strategy at Standard Chartered Wealth Management. And I should tell our audience, Daniel, that you've got top preferences here over the next 12 months. Hope we can get to many of them. But let's start off first with just a very general strategy. Should you get aggressive here, or should you still play it safe?
Well, on a level one asset allocation basis, we are playing it safe via fixed income. We have an overweight on fixed income because we believe that the Fed continues to hike rate, and there's still a high probability of recession in the U.S. Such an environment, could mean that eventually the rates would be peaking out as the recession hits, and the Fed cutting rates in the second half of the year, which would bode very well for fixed income. However, I would like to add that selective in equities, there are areas to watch out for, and primarily we have been, pushing Asia ex-Japan, particularly China equities, and we'll continue to do so.
So I know for you that SAFE is an acronym. Secure your yield, allocate to Asian assets. The F is fortify against surprises. But the E I want to talk about, expand beyond the traditional with alternative strategies. What would you look at in that regard?
Yes, mainly diversification via hedge funds. Areas such as the private equities can do pretty well in such an environment, right? Because given the situation, it could be distressed assets, and they can be snapped up at a decent price and for the longer term horizon.
We're curious about whether or not we can really embrace the policy adjustments that we've seen in China, or whether or not there's a danger that those can be changed pretty quickly if something changes, for instance, within that black box in the party that we know nothing about.
I believe that it is quite difficult to turn back, right? So this will be opening.
If you have to.